Sunday, Simon is here again with AvaTrade, and this is our weekly webinar, your weekly trading plan. And for returning customers or visitors, I want to thank you for coming back. That means that you're finding it useful. And for the new people, just few words about the webinar. It's pretty much says it in the title. The whole idea of it is really to having a plan for the week. And I always say it, I'll continue saying the same thing. You plan your trade and then you trade your plan. This is why, of course, there's no guarantee that your trade will be successful, but it gives you structure and it kind of keeps you away from spontaneous and chaotic trading, and it gives you more chances to succeed. So this is our weekly uh, webinar, your weekly trading plan. And this is me, Simon Friedman. I'm a senior account manager with AvaTrade, and I have over 22 years of experience in the trading field. I started as a proprietary licensed trader back on Wall Street. I've done that for 11 years, and after that, I started to educating and training other traders and become a mentor and educator. And currently, I'm working as a senior account manager, as I said, at AvaTrade. I know some of my customers are here. Uh, Watching this webinar. So thank you for coming back, and I hope that this is good for you. Now, the agenda of the webinar is pretty much the same. Indices, stocks, commodities, FX. We'll be going through these things and trying to make sense of what's happening. And of course, I normally start with the big picture, what's happening fundamentally, and what's the trend, what's the mood on the market, and what's in play. So we'll be doing that in a moment. And these are the sources that you can follow us at the Telegram, at Twitter, and of course, YouTube is a great, and I always repeat it, great source of lots of educational material. All the webinars, most of them are being recorded and posted there, including this one. So I suggest to all of you, of course, to subscribe and to click on the notifying bell that you'll be notified every time something new is added. And of course, you can share it with friends. It's a good source of education and other things. And of course, the risk warning, you can read the full statement at our website. Pretty much what we do here is educational only, and you shouldn't take it as advice or anything of that source. And I want to start with this picture. I took it off the website, MarketWatch. Some of you are probably familiar with that. It's one of the financial websites there. And I just took a screenshot. I kind of like it. I don't know how truth it is, but it says the history says the next bull market is just months away, and it could carry the S&P 500 to the 6,000 level, according to the Bank of America. Uh, I really don't know. I'm sorry to say it. It's going to be sounding rude and funny, but I'm not sure what they smoke there in Bank of America when the whole market is falling. And I'm going to read in a moment other titles from the same website. And these guys, maybe they were paid by someone, maybe government, just to bring a little bit of excitement into it. Or maybe they're right. They could be right as well. A lot of times we see bounces on the market, but going to 6,000, it's a little bit stretching it. So I just want to read few titles that I see on MarketWatch. And if you go to Barron's is a very kind of a respectful financial publication, and a few of them just came out. And it says, housing just hit the wall. What's next for prices, brokers, and builder stocks? Another one, as tech stack creator, Oracle offers a good place to hide, whatever that means. Stock won't sink forever. Okay, this is one of the other things. Home builder stock are downgraded. Demand of housing for housing just isn't the same. And speaking of which, just want to bring a few things to your attention. And this is something just to kind of summarize what's happening here. Again, the war is still there. Unfortunately, it's not getting any better. And we have inflation hitting everyone. We have gas prices skyrocketing. We have food prices skyrocketing. Um, uh, the consumer confidence, it's really at the floor. I don't know, maybe I'm exaggerating a little bit, but people are not really happy with the level of living on the or the living situation they're in now. So it doesn't look that great, right? And now another thing, are we in recession? Some say we're hitting recession. They even try to time it. Others say we're already in recession, and certain indicators are showing it. So it's a lot of negative things out there. And you know, when Bank of America comes with this statement, I'm kind of laughing at it. Again, just my opinion. You don't need to take definitely you shouldn't take it for granted. It's just something that's logical in this situation to kind of laugh of these predictions in the current situation. And of course, uh, we had the interest rate hike of 0.75. We spoke about it last week, and we said that since the latest inflation data, there was a huge chance that they will do 0.75, and they did. And actually, I was listening. If you had a chance to listen to press conference following the decision, there were questions and things, and things don't look that exciting anymore. And we are really heading for uh, not really a soft landing. That's what the Feds were trying to orchestrate there. So again, things are not that great, and we'll talk about specific markets in a moment. And also, as usual, I want to show the economic calendar. And again, it's important to understand the importance of it. That you know, I think traders should know. I personally try to see what's happening for the upcoming week. I make marks for things that are relevant to my trading, or anything that could affect the markets that I'm watching. So I suggest you can do the same. And here I just take out the high impact events. You can filter them. There's a lot of sources. You can just Google economic calendar. You can, of course, find it on our application, and the web trader has a link to that as well. So a few things for the upcoming week. We have interest rate decisions from China on Monday. And then Tuesday we have the governor of Australian banks speaking, and they have, I guess, meeting minutes, the announcements of monetary policy, and so on. We have retail sales from Canada the same day. We have Bank of Japan monetary policy meeting minutes on Tuesday as well. Wednesday, CPI numbers from UK, very, very important. Now, two things are, and we'll talk about it in a moment, but you know what, maybe I'll mention now. The Fed said, and that's what Powell said at the press conference, two things. Of course, they're watching the inflation, they're watching the CPI figures and the inflation, or any inflation number, and the employment or unemployment level. And they're trying to bring the unemployment level to 4.1 and inflation to 2%. That's the goal, pretty much, to bring stability. And that's what they do by raising the rates and taking other measures. So similar idea here. Of course, UK has been hit with a high inflation as well, and they've been raising a few times. I believe four or five times they increased the interest rate, and this number will be really closely watched. We have also CPI numbers from Canada, and on Wednesday we have a Chair Powell testifying in front of the Congress. I think they're going to be drilling him about the, not I think, I'm sure they're going to be drilling him with the specific questions since the last decision and since the situation in the US in general. Okay, we have PMI numbers from Germany on Thursday. European Union PMI, PMI from UK, and then we have another day of testifying of Powell. And this is very interesting, the bank stress test info. Basically, since the crash 2008, if I'm not mistaken, they really started to do this to really see, kind of do simulation. This certain situation with the banks would survive. As we all know, Lehman Brothers really went kaput in the last crash of 2008. So this is important, I think, what the test crash thing will come out. And Friday we have again the governor of Bank of Australia speaking. So let's move now to the terminal, and then we'll be working out certain groups of instruments, and we'll start with oil and gas. Let's do that. Crude oil, as the market's starting to sell, crude oil really came in from, we tried to break 120, 122, 123, even touched almost here. The high was 123.67. That was on the 14th of June, and since then we fell, and we came back to 110 area. Now, if you think logical, and I like for you to think, not just to take things for granted. And a logical thing is here, it's very simple. As the market is crashing, that just shows the economies, or the global economies, are not doing that great, and that brings the idea of really the demand is going to shrink, or it is already shrinking for the energies. You know, if there's less sales, less construction, less factory production, and other things, it's just logical that less energy will be used, and that takes crude oil and natural gas. So the two things to any market, and I say it all the time, it's a very simple principle of the market. There's a demand and there's a supply. If supply is huge and demand is shrinking, the market is falling. And if demand is increasing and the supply is shrinking, the market is going higher. So here we still have a supply issue because of the war and so on, but I guess the demand shrinking faster than supply. And in this, or maybe just the prediction or anticipation of the market, anyway, the market went down 110 at oil. Now we at this level we might find some support. We just closed below the 50 moving average, and the 100 moving average is only $2, $3 lower. So it looks like some buyers are coming in because we did close higher than the low on Friday. The low was 108.32. We closed 110.19. So we bounced another $2 on oil. So we'll be watching what are next things, how the market is doing. And again, maybe that prediction of Bank of America will play out in a couple of months. We're going to start skyrocketing to the upside. It could be happening. I wouldn't be surprised if anything happened. It just, in a moment when we get to indices, I'll try to illustrate that for you. Now, natural gas, similar story. It had a double top around 9. That's what, 935. We've been hit 965, and that was the beginning of June. And then we were held around 8. And then in the beginning of the week, also on the 14th, there was a huge drop of natural gas, and we came back to around 7. So we hit, I think on Friday, we hit 688, and we closed right on 7.01. Again, what's next? And interesting on natural gas, fundamentally, I just want to mention a few things. Europe is trying to cut itself off of Russian oil and natural gas, for that matter. And what's been happening? They really start using the natural gas that was stored. So the capacity is really low, and some of them have enough for using it till January. So they're looking for solution. And one of the things that I looked it up, and it happened, one of the developments over the week, that actually they signed a deal with Israel and Egypt. There's things that they're trying to do together. So natural gas that is being kind of pumped in Israel through the pipe, it will go to Egypt, and from Egypt it will get on the boats and get to Europe. So that deal has been signed this week. And I don't know how it's going to work technically and when will they start this, but this is a big thing and a huge change. So let's see how that thing work out, because the whole idea is really to choke the Russia and to make them stop this crazy bloody war that's been happening. So they're trying the best they can do do that. So that's natural gas, and we are around $7. And just a few days ago, we were almost at 10,965. Heating oil as well. It didn't drop that much, but Friday was a nice drop. Maybe it's the beginning of continuation to the downside as well. It's going to catch up to the downside with other energies. Now, I want to show you another slide that I prepared. This is the 10-year yields, and I talk about it at the webinars, and basically it's an indication what's been happening, and the Feds are paying attention to that. So the 3 is a key level. We broke through it, and we came to what, 320, then we came back to 2.7, double bottom confirm, and since then we've been just going higher, and that's actually what caused the gold to really sell off. And if you can see, the past few days we tried almost 3.5, 3.499, and now we're back to this 3.2 area almost. So this is very important in the upcoming week. If we hold this 3.2 and continue higher, dollar will get stronger, gold will get weaker, and there's a chance that the market will continue sliding. So it's very important. You can find this 10-year yields. Just Google it, and there's Bloomberg or other platforms. You can see the quotes on it. So I just wanted to bring it up. It's important to watch as an indicator. So let's move back to the MT4, and I just want to show you how it really works. So dollar index, we'll see just for a moment. If you can see, as the it was retraced to the downside on the yields, and the dollar went down with it as well. And the gold, the same thing. Let's take a look at the gold really quickly. See, as the yields made a new high, a new recent high, the gold sold out, and as they went down, the gold had a move to the upside. And again, if we're already speaking of gold, so wrapping up with commodities, we said last week and probably the week before that we had the range between 1800 and 1850. We moved higher recently, and then this week it was a big sell-off as the yields jumped to the new highs or new recent highs, and the gold came back to retest 1810, 1808. Even it went as low as 1805, and now it tried the next 2 days when the yields cooled down a little bit. We came back to 1850, and now we around 1839, 1840. So it's important if you'd like to watch what the yields are doing, just to get a feel what's going to be happening to the gold. Again, it's not 100%, but it's very gold is very sensitive to the inflation. Now, another thing, copper. Copper has been selling as the market was selling, and it's been super weak lately, and it's reaching this level around 4, where it could find some support. Now, again, for that, we need some positive things on the market in general. We need some positive things from China. But this level, technically, sorry speaking, it looks very strong. We made a high from here. We stopped again around this level, around 4, very strategic, very important level. And here also on Friday, or this week, this is the weekly chart, we went a little bit below at 398.70, but we closed on 4 exactly. So it looks like they are holding around the $4 on copper. So this is as far as commodities. And let's take a look before we move on to soft commodities really quick. We are sitting on the 100 moving average on the wheat, and corn has been much stronger. And wheat, again, it's fundamentally speaking, there's a big threat of hunger in some countries, as Ukrainian wheat is still locked. They can't move it. The sea is closed for them, and there's a big chance of a big chaos and shortage of wheat in the world. So again, this could be a retest before the move higher, unless some solution will be found. And this level here around 1030, what was the low here? 1026.75, the low of this candle here. We're really close to it, and there's a chance by holding also 100 moving average here, there's a chance that we might kind of start this move that's pretty much overdue, fundamentally speaking. We were at 12, what was it, 1200 here, and then we just moved lower to this level around 1026, and there was a lot of accumulation here. Again, anything could happen. We can go down and test 900. It's also possible. But again, it would be logical if after this build up or consolidation, we start moving higher as demand is high and supply is really short there. Okay, so that's it with commodities. And let's talk about few stocks and then we move to indices. Now, Pfizer, had a support here around 47.5, and then we dropped lower, trying to find a next support. Again, this could be it here. If you look back, we started this all move after this spike down to 46.53. We are at this level now. Here also after consolidation, we moved higher. We had a higher support here, and then we broke through it after a few attempts to hold it, and we came back to this major support area. We could move higher. Netflix, I'm not sure if I talked about it at the webinar or my other reviews, but I found that Netflix came to this previous support here, and there was a nice plan to possibly enter in these levels here. The low was 162.38, and after this retest and closing higher, there was a nice buying opportunities here on Wednesday. It went from a low 168.31 to 183.53, and it might continue. Actually, it didn't sell off afterwards, so maybe this level, again, nothing is in stone. It can easily break down and go lower, but it looks like these levels are attracting some buyers as they're not letting it break below a little bit less than 163. So 162, again, 164, 163 area, it looks like a support. Now, Amazon, since that split, it doesn't find any strength. Just to remind, the split was priced at 122. We are trading in 106, 107 area. Now, Tesla and Twitter, are still not clear what's next. Tesla is trading around 650. Twitter also, after this drop, there's a consolidation going on. We are holding this 35 to 38 area. Maybe if we have some positive news on the deal, we might see the spikes to the upside in Twitter. We'll see what happens. Now, if you remember, I mentioned today there's a stress test for the banks and so on. So the first thing I thought about, let's take a look at the bank stocks. And if you take a look here, we really trying to hold these levels around here. This is Citibank. We might see a bounce at some point. Goldman Sachs, again, there was a huge drop. It went down with the market heavily, and we are holding these levels here at 278. And JP Morgan, it's been super weak, and maybe it's time for a bounce. I know some traders like these things to catch or to be the first one to the bounce. Of course, you have to be careful, but certain things tend to have nice bounces and maybe long bounces as well. So the banks will be definitely in play this week with all this stress test and so on. And one more thing, Uber, I'm watching Uber here. Friday, it had a nice move to the upside. Again, a while ago, we spoke about it when the CEO was super positive about the stock. Since then, with a huge sell-off, and this was the last support before the current one. So this was 21.38, and then we failed to hold it with the market falling this week. And on Friday, with a very, very strong day, we closed above this previous support, and it could be a trigger for the bounce here on the Uber stock. So we'll be watching that as well. Now, so that's as far as stocks. Let's take a look at indices really quickly. China index had a super crazy 3 days in a row. We moved higher. If you remember, I mentioned this level were between 13.5 and 14,000. So on Wednesday we moved higher. Thursday we just erased that gain, closed below that 1400 again, and then on Friday we moved higher. We closed higher than Thursday's high and definitely above this 1400 level. So this looks very bullish here. And if you remember last week, I said that China is gonna inject some positivity and pull the market with it to the upside, or the market would be really bad and pull China in, and that's what happened on Thursday. But on Friday, China moved back to the upside. So very interesting how this week is going to play. Nikkei, super weak. Friday tried to bounce over here. So Japanese market is not that great. Nifty 50. You remember when the market was falling, that thing just going to the skies. Now it's been super weak, and maybe it's time for the bounce. It's also possible. Again, the low here was 15,254. Friday we had a spike below but closed higher and higher than the opening. So it could be a sign if we have a bounce, which we could after the recent sell-off in the market. It could be a profit taking or whatever, or maybe the prediction of Bank of America will happen sooner. Sorry for my sarcasm. But this index can really have a nice bounce as well. I don't know if fundamentally is being supported or not, but purely technical, it could be happening. S&P 500. Thursday, as you can see, Thursday, most of the indices sold out. Friday, we closed higher. And of course, it could be anything. It could be a temporary reversal that's waiting for us on Monday and the whole week, or it could be just a simple closing a position and profit taking before the weekend, as traders and investors don't like to take risk, especially if you had a nice profit for the whole week. And this is the weekly chart, 3 weeks down. And another thing that you can see now on the weekly chart, we really reached this level of January 31st, from which we started the last wave to the upside. So this could be what Bank of America keeps in mind, or thinks or has in mind, that this level here, let's see, low of 36.76 and a quarter, we actually broke through it and we closed $7 higher. Okay, so it could be that this level is going to hold very strongly and we might bounce from here. It's also a possibility. So we'll be watching, of course. The upcoming week is going to be very interesting. Now, Dow Jones, similar thing. I'm not going to go into details. The same idea. All three of them pretty much work as a group. French index, even Friday didn't really have a bounce. It didn't have a bounce. FTSE worked very nicely. If you remember, I spoke with you last week or the week before that we were retesting the 76.22 area, and if we're not seeing any closing above it, it was going to trigger the sell-off, because the buyers are going to get really exhausted and the sellers are going to push to the downside. And of course, the global slowdown helped it, but it was super intense. It was initial 3 days to the downside, then was a gap down, and then Thursday just killed it. That was probably the largest candle in a while, or if ever, maybe. So again, after this huge drop, we could find some buyers coming in and taking it higher. So FTSE really struggled or suffered this move. DAX also has been super weak. I don't see any levels of support here, but again, if global markets, US, if they start moving higher next week, of course, the DAX might follow with it, and the same thing with the Spanish index. Now let's take a look at dollar index. Okay, dollar index on Thursday, it moved lower and it went below 103, 104 area. We really had a strong sell-off. We went as low as 103.18, and then Friday we bounced right back, almost touching 105. We closed at 104.43. So after kind of confirming this level around 104 as a support, we might continue higher here. And again, to remind you that I showed you that picture of the yields of a 10-year bond yields. It's important, if those are going to move higher, dollar will continue higher. And if the opposite happens, dollar might find some hard time breaking the 105 area. Maybe we'll try to hold this 104 and maybe even lower if that's happening. Now, the major currencies. Finally, we had some sell-off on yen, and it gave a lot of hope, or some hope, to the traders. Okay, this is it. Maybe we're going to sell. And it wasn't until Friday that just brought it right back. That was crazy. 2 days strong selling. Okay, the high here was 135.30, and the low was 131.50. It's about almost 300, almost 300 pips, right? And on Friday, just one day, we went 220 pips to the upside. So as of now, the situation is like this. We have a recent high, or a current high, of 135.58, and we have a Thursday low that we couldn't go any lower. That was 131.48. So it's about 400 pips channel that we are in now. So it could be that we break higher. Again, anything's possible, and also it could be we break lower. But as of now, it's an environment for the traders that really will try to trade the channel, and selling closer to the top and buying back at the bottom, vice versa. So we'll be watching, actually, because what happened, if you remember, I mentioned last week that on Friday we might see some interest rate decision from Japan, but they kept the rates the same. They didn't do anything to change it. So as of now, things are remaining the same. Australian dollar had a huge sell-off, 2 days up, and Thursday, on the strength of a dollar, sold again. New Zealand dollar, same idea. And Turkish lira, very interesting development here. I know not many trade. It's an exotic pair, not an easy one to trade. And take a look, after each long consolidation went higher. Just to remind you, it's a huge inflation. I don't know what is it now, but a week or 2 weeks ago it was 72%. It's just insane. And take a look, after this extended move to the upside, there's no sell-off. We're holding this 17 area, 1715, 1730 area, and we're trading higher than this initial move to the upside, which was 1714.75. So definitely is being watched by some traders as an opportunity. Now, of course, euro dollar, same idea, just the opposite of the dollar index, and pound, the same idea as well. So again, we'll be focusing on the dollar index this week. We'll be following what the yields are doing, and in general, we'll be following what the economy is doing, what the numbers are. We have testimony of Powell at the end of the week in front of the Congress, and we'll try to see. And again, it could be that we might see the bounce in the equity markets. It could be happening. We'll be watching that. And let's wrap it up with cryptos. And I feel really sorry for those that are holding with the losses. And again, a lot of people made money on it. A lot of people lost money on it. And if you remember, we spoke about things that cryptos, Bitcoin especially, it's been going with the market and against the dollar. As the dollar got stronger, Bitcoin really started having a lot of selling going on, and then it was also supported by some public opinions that people should get out of crypto and so on. So anyway, whatever they said or didn't say, the fact is there's a huge selling in crypto, and it's been selling for a while now. It didn't hold 34, it didn't hold 30, it didn't hold 25,000, didn't hold 20,000. It just broke through it easily. And what's next? I really don't know. Nobody does. So same thing with Ethereum. I don't usually show it, but take a look. Just this is a weekly chart. So it just lost half of its value in the matter of a week or 2 weeks. Super weak. Okay, so that's your crypto. And again, just to say it, it's just simple logical saying. When there's a huge opportunities or huge rewards, it always comes with a high risk. And of course, if you looking for low risk, the returns are not that great as well. So it brings up the thought that risk management is very important, and I try to say it every time that it's important that every trader has his risk criteria and structure and follows it. This way you survive the turmoils of the markets, you survive and hold equity to work with. And just to wrap it up, again, we had super weak days with equity markets, and dollars got some strength again. Inflation is there, increase in interest rate caused more panic to the market, so it was a huge sell-off. And this week we'll see, we might see the bounce, we might continue lower. Technically speaking, if you look at S&Ps, we had reached certain levels. They might be considered as a support. That's what I showed you right here. And the saying that I showed you from Bank of America, that we might see a reversal in the market. And again, we don't know. We'll take one day at a time. We'll try to measure our risk. We'll try to have scenarios, and we try to stay positive. That's the main thing. So I want to wish everyone a great week, and enjoy the weekend of whatever is left of it, and get some energy and strength, and stay happy and healthy. And we'll be back next week. All the best.